Are you prepared to navigate a whirlwind market? Today, we're diving deep into the insightful analyses from top financial experts.
That's right. With insights from Greg Gammon, Mitch, Steve Van Meter, Felix Zulauf, and David Lin, we're equipping you with must-know market takeaways.
And here's the good news. We've distilled their hours of analysis into concise, actionable summaries just for you.
Let's begin. Greg Gammon starts by unraveling the tactics employed by shadow banks to operate under the radar.
Don't miss out. Mitch will then share critical updates on the Airbnb market and what they mean for investors. Today, we're delving into Greg Gammon's perspectives on the banking system and how it navigates and sometimes bypasses regulatory constraints.
Gammon suggests that banks operate under minimal constraints when creating money, presenting a more complex understanding of financial regulations.
Gammon argues that banks often perceive regulations as flexible guidelines rather than strict limitations.
He asserts that shadow banks possess significant freedom to operate outside typical regulatory frameworks.
Gammon notes that when financial incentives are favorable, banks tend to find ways around regulatory barriers.
He highlights the manipulation of perceived constraints, which allows banks to significantly grow their assets.
Gammon explains that shadow banks bypass traditional regulations, allowing for more freedom in operations.
He emphasizes the innovative tactics banks use to maneuver through regulatory scrutiny while maximizing profits.
Looking ahead, Gammon predicts that as shadow banking grows, we may see stricter regulations emerge.
The effectiveness of these potential changes in curbing bank flexibility remains uncertain.
Gammon advises investors to proceed with caution, highlighting the unpredictable nature of banking operations.
He stresses that policymakers need to comprehend these complexities to create effective regulations.
Today, we're diving into an alarming analysis conducted by Mitch on the ongoing Airbnb fire sale and its implications for the housing market.
Mitch highlights that 29% of Airbnb owners are selling their properties, which could potentially destabilize housing prices.
Mitch emphasizes that the excessive inventory of short-term rentals could lead to a crash in housing prices.
He suggests that investors may need to reassess their strategies in light of these shifts in the market.
Mitch shares alarming statistics from AirDNA, showing over 667,000 short-term rentals up for sale.
This figure represents 74% of the total market listings, signaling a troubling oversupply.
Mitch comments on the recent situation in Dallas, where short-term rentals face significant legal restrictions.
He notes that this regulatory environment is forcing numerous Airbnb owners to quickly sell their properties.
Mitch stresses the necessity of due diligence for anyone contemplating an investment in short-term rentals.
He indicates that many owners overlook the fundamental business aspect of operating an Airbnb.
Mitch discusses potential outcomes for the housing market if the Airbnb crisis persists.
He warns that ongoing challenges could lead to a notable drop in housing values and an uptick in foreclosures.
Mitch concludes that it's crucial for potential investors to monitor changes in Airbnb regulations closely.
He advises focusing on long-term rental opportunities given the current environment.
Welcome back, everyone. Today we're revisiting the key market insights shared by the Trade Brigade team.
The team highlighted the major concerns regarding tariff threats, especially from China.
The importance of monitoring the economic calendar cannot be overstated, especially regarding tariffs.
The Trade Brigade team emphasized how China's vows of retaliation increase market uncertainty.
The hosts discussed how ongoing inflation may affect market movements.
They analyzed potential impacts of upcoming economic data on trader sentiment.
The team noted heightened caution among traders amid rising geopolitical tensions.
They mentioned mixed sector reactions to tariff announcements.
Looking ahead, analysts predict ongoing market volatility as reactions to news.
The Trade Brigade team suggested keeping an eye on key economic indicators.
The Trade Brigade forecasts indicate that market volatility is likely to persist.
They advise traders to remain alert as key economic indicators are expected this week.
The hosts emphasized the need to stay aware of geopolitical developments.
They concluded that understanding economic data is crucial for making informed trading decisions.
Today, we're diving into the significant selling of US Treasuries by foreign governments, as analyzed by Steve Van Meter.
Steve highlights that these sales are a reaction to global dollar shortages, not a political agenda.
According to Steve Van Meter, foreign governments sold a staggering net $86 billion in US Treasuries in just 3 months, reflecting a critical dollar shortage.
Steve clarifies that these Treasury sales aren't driven by animosity, but rather by fundamental monetary needs. Steve notes that during dollar shortages, foreign governments liquidate their treasuries to fund their economies.
This strategy is crucial for maintaining liquidity in times of economic distress. What does Steve say about the behavior of private versus public investors in the treasury market?
Steve emphasizes that while foreign governments are selling treasuries, public investors perceive them as a safer bet, especially with anticipated interest rate declines.
What predictions does Steve make regarding the future of US Treasuries?
Steve forecasts that lower interest rates are likely, which would elevate treasury values benefiting domestic investors.
Steve concludes that while foreign selling of treasuries can cause concern, understanding the economic factors driving these actions is crucial.
Insights into treasury dynamics can significantly enhance investment strategies in today's volatile market.
Today, we're analyzing Felix Zulauf's insights on the economic climate and potential market impacts.
Zulauf's predictions highlight significant uncertainties affecting global economies.
Felix Zulauf believes a recession is imminent due to uncertain governmental policies and weak indicators.
He notes growing consumer hesitance, suggesting reduced spending.
Zulauf predicts a significant market correction, estimating a 20% drop in major indices.
He notes that early April showed unprecedented market pessimism.
Zulauf attributes the anticipated economic slowdown to changing government expenditures.
He suggests that policy-related uncertainties are leading to reduced investments.
Zulauf discusses how investor sentiment around earnings forecasts is affecting stock valuations.
He suggests that market fear leads to rapid changes in asset values.
Zulauf predicts that recovery post-2025 will heavily rely on government stimulus.
He foresees an increase in both inflation rates and asset prices in the coming years.
Zulauf advises investors to remain cautious as future market volatility is expected.
He emphasizes the importance of diversifying investment portfolios to navigate upcoming economic challenges.
Today, we're delving into David Lin's analysis of the significant volatility impacting the markets.
David points out that the Nasdaq has dropped 1.3% alongside the S&P 500, indicating a turbulent trading environment.
David Lin emphasizes the danger of engaging in trading during periods of high volatility.
He warns that many investors might get caught in a drastic market drop if they act impulsively.
David notes that the market has shown multiple bearish flags, indicating selling pressure.
He highlights the importance of interpreting these signals before making any trading decisions. According to David Lin, the Nasdaq has potential for a significant decline, possibly around 15%.
It's crucial for investors to prepare for these potential drops.
David stresses the performance of gold, indicating it as a safe haven during current market instability.
He notes that gold miners are also seeing favorable movement and investments.
David predicts we might see a dead cat bounce in the markets, followed by further declines.
Investors must be prepared for ongoing volatility and adjust their strategies accordingly.
David Lin concludes that investors should focus on preserving their capital during these times.
He encourages them to closely monitor market signals and think long-term rather than chasing short gains.
What a whirlwind of insights we've just experienced.
Definitely. David Lin was particularly clear about the rising volatility and the importance of caution.
Right? And Felix Zulauf's take on a potential recession really added another layer to that discussion.
And I found it fascinating how Steve Van Meter emphasized that the selling of US Treasuries isn't just political, it's about actual dollar shortages.
Exactly. It's a reminder that market dynamics are often driven by underlying economic factors.
Plus, we can't overlook the Trade Brigade team's perspective on global tariff tensions. It's scary how these issues intertwine.
And let's not forget Mitch's alarming stats about the Airbnb market. It really shows how fragile the housing market can be.
For sure, George Gammon's insights into regulatory manipulation by banks only deepen our understanding of these tensions.
So, if you found today's discussion valuable, make sure to like and subscribe to keep up with our future content.
Your support is crucial for us to continue delivering expert analyses that help you navigate these turbulent times.
Join us next time as we explore the evolving landscape of global trade dynamics. It's going to be essential viewing.
Thanks for tuning in, and we'll see you in the next video.